Hello, I'm Thomas Taplin. Welcome back. Today we're reviewing the European Central Bank's monthly report, and as I'm sure it won't come as much of a surprise to many of you, it's pretty much the same as what was announced in the policy meeting last week. That said, one interesting thing did come out of it, and I'm joined now by Carsten Brzeski, Senior Economist at ING Bank in Brussels. The stronger euro poses a threat that inflation might fall short of the European Central Bank's target. That statement was probably the most noticeable point to come out of the report. Carsten, how likely is this to happen, and what would this mean for future ECB policies?
I think obviously the stronger euro has slightly opened the door towards another rate cut for the ECB. Because if we see in March that really the ECB staff projections show that inflation is lower in 2013, if growth is projected to be even weaker in 2013, this could clearly be the platform for the ECB to again reconsider a rate cut. I think if you look at it right now, it looks a bit as if markets exaggerate the strengthening of the euro somewhat. Because if you really put it a bit in perspective, the euro was very weak 2 years ago. The current level is something like between 5-6% above the 2012 average. So this is an appreciation, a strengthening of the euro, which is nothing the ECB is really worried about right now. Obviously, if the current trend would continue, if we would go above 140 vis-a-vis the US dollar, this is something that the ECB will tackle in a couple of ways. Obviously, right now it's verbal interventions. The ECB is trying to talk the euro down somewhat. Another option could then be to cut the interest rate to strengthen the Eurozone economy. Other options, like really a fully fledged quantitative easing, I think are highly unlikely.
Now, just looking at the idea behind the monthly report itself, does it frustrate you that when markets are looking for good news, or any news at all for that matter, the ECB monthly report says almost the same thing as the policy meeting, which in this case they held last week? What's the point in having the monthly report?
That's a very good question, especially in terms of policy messages. Normally, the monthly bulletin hardly diverts from the messages sent out at the press conference. I think what can be interesting in the monthly bulletin are the research presented here. Sometimes you have an interesting analysis for a box, kind of deepening interesting topics. This once in a while happens, so this is interesting for the ECB watchers to get a better idea of how the ECB is currently thinking. To be honest, in the February monthly bulletin, so in the latest, we don't get any added value on what the ECB currently thinks.
Also to be mentioned in the report were that upside risks are connected to higher administered prices and indirect taxes, as well as higher oil prices, and downside risks come from weaker economic activity and, more recently, the appreciation of the euro. Now, is this the direction you see the Eurozone and single currency heading towards?
No, exactly. I think this is it. We're still in a very weak growth environment. Right now, we've seen a couple of, let's say, positive signals from confidence indicators, giving hope that the Eurozone economy should return to growth by the mid of the year. That's one thing, but clearly here, I think the risks to the economic outlook are to the downside. In terms of inflation, I really think yes, it is a balanced outlook right now. Oil prices, administrative price are of course something that the ECB cannot really tackle. Let's say the downside risks coming from weaker than expected growth from the euro exchange rate, this is something that could in the end still trigger an ECB reaction. Now, I think right now it clearly shows that the monthly bulletin, the ECB shows that the Eurozone is still in a very challenging environment, probably with the disappointing growth numbers for the fourth quarter, where, again, a reminder that despite the positive contagion in financial markets, that we all see, that this positive contagion has not reached the real economy yet, and that we're still having, I think, a long way to go before the Eurozone economy stabilizes again.
Many thanks for joining me today, Mr. Brzeski. That's it for now. I'll be back tomorrow with the press review. Also, don't forget to keep an eye out for the many other exclusive interviews we hold here on Dukascopy TV. But for now, goodbye.